Hey there everyone, this is Trader Tim from EminiMind bringing you another monthly market analysis. As always, trading futures, option on futures, retail exchange, retail off exchange, foreign currency transactions involve substantial risk. Is not suitable for all investors. Past performance is not indicative of future results. So with that out of the way, I've got a couple things to talk about today. We're going to start with the broader picture on the ES. Talk about where I think we're headed in the next month or so. And then I want to address a couple things related to exiting trades, in particular managing your stop placement with trail stops. So let's start off with where we've been here in the last couple of months. In the retracement webinar I did a couple weeks ago, we talked about the importance of these bigger retracements, meaning a move occurs, and it always occurs from the left side of the screen to the right, and then we get a pullback, and then it's up to the market participants to either push the market to new highs, as we saw here in the last couple of weeks, or for the market to change direction. So we are looking for the market to make new highs up to 2150s. Reason being that the market has pulled back halfway of its original move that occurred back in February. And we have created some nice support here, as well as a nice, steady trend higher, albeit shallow. But it's those violent moves straight up that aren't quite as sustainable as a slow grind higher or lower, for that matter. So in the meantime, while we kind of sit here, we did make new highs, and then in the last week or so, given we went into Memorial Day weekend, and so this last week was really the first week, essentially the first unofficial week of summer, and we typically see things slow down a little bit in the summer. I've seen the markets remain very technical, and that the setups go entry to target from tick to tick. So it's a very technical market in the summer, but the volume tends to shrink a little bit and the ranges tend to shrink. So we'll see if we get that happen. We'll see if we can get that happening this summer as well. So I am pulling now from lows to highs, from our recent low to our new all-time highs that we made. And you can see that we've tested twice the 2095 level. And, big round numbers like 2000, 2100, 2150, those are just numbers that the market's going to gravitate to, traders are going to gravitate to anyways. So it's nice when those numbers line up with retracements setups that we have. So we have a 50% pullback to 2095s, and you can see the two tests, and then today, Monday, we've had a nice rally right off of that 2095 level, and you can see the target of 2150s lines up with both the smaller daily retracement as well as the longer daily retracement. So when we get multiple retracements lining up with the same targets, that gives us even more conviction that the move has a lot more potential. So we'll be looking for a break of once we close today, we'll be looking for a break of today's high. And if you were looking to wait for confirmation in that 2095, watch it trade, and then let the bar close, you could buy above the high of the low bar in the trend. So in this pullback, today's close, you could buy tomorrow above the high because this is the lowest bar in the pullback. And so to kind of go into that in a little bit more detail, I'm going to zoom into a 5-minute chart, and we're going to tie this into a little bit of trail stops. So what I mean by buying the high bar in the pullback or the low bar of a rally, what we're looking for is the market to get some sort of a retracement. So if we look at this morning, 8:30 here, the market pulled back briefly, and if you were saying, well, I want to get into the market when momentum changes, when we shift from going down to going up, Well, how do we know when that is? What I like to do is wait. You can use a buy stop, meaning you'll buy if price, in this case, because we're going down and we're looking for a reversal, and we want to get long only when the market shows us that there's potential for some momentum behind that long. So if we were to just buy randomly at any point, the market could just blow through our entry and stop us out. But if we wait for a candle, waiting for the candle to close, and so let's take this one here. If we were to look at, okay, we have a nice little hammer. I think we're going to get a reversal, and what I'm going to do is back it up just a little bit. So we'll just pretend that we don't know what's going to happen. But let's say, oh, great, we got a little hammer, and I want to get long. Placing your buy stop above the high, meaning the high price of this bar, which is the lowest bar in the pullback, would mean that if the next candle broke above the high, there's a potential trend change. So we can put our buy stop essentially at 2125 cents, 2100 and a quarter, because that will be a break of the high of this candle. Well, the next bar did not break that. We opened at the high of the candle and we sold off, so you wouldn't have gotten filled. The next bar formed a lower low. You can see how the tail here is 96.50s and the tail previously is 96.75s. So this bar here is lower. This is the lowest bar in the pullback. We can put a buy stop above highs, and in this case, the next candle did break that. And so you can put a buy stop above highs, your stop below lows, and just keeping in mind that the range, the size of the candle. So if you're gonna, if you want a 2-point stop, you would want to look for candles with a 1.5 point range to allow you to be able to put a buy stop above highs and then a actual stop below lows. And so then what you can do is just trail your stop. So once this next candle closes, you can take your stop from under lows and bring it up to the next candle's lows. And then as we go to the next candle, once that candle closes, we can bring our stop from the previous candle's low and move it one tick below the next candle's low. And we just keep doing that until the market breaks that low. And in this case, market moved a few points, and so we'd have our stop underneath this candle's low, and then it was the next candle that broke down a little bit, and so that's indicative that there's a potential short-term trend change. So that's how I use the buying above the high, the low bar, or selling below the low of the high bar, as well as trailing my stop, using the initial stop below lows or above highs of the entry candle, but then also trailing my stop as the market goes in my favor. So you could combine that with, if you're using, let's say, a 2-point stop, you could just throw out a 6-point target and leave your target sitting up here, and at the same time trail your stop so that you get to lock in profits along the way. And that's a really good method to use, because if you look at, if you go back and kind of look at the market, you can see, especially with the ES, a very technical market, you can see that the market tends to, once it gets going in a direction, it doesn't retrace, it doesn't break the prior candle's low unless it's a very choppy sideways market. So once you get moving, it's a pretty systematic way to kind of manage your stop without having to really do much thinking. You just, once the next candle closes, you take your stop and drag it under the previous candle, and just keep doing that until the market reverses. So that's what I'll leave you with today. Again, we're looking for the market to drift a little bit higher to this 2150s. I don't see it happening super quickly in terms of occurring in a week, but we do have a lot of support here below us right at this level. So if we can get a break of highs, meaning if we can break 2134s, then I see us going quickly to 2150s. So keep your eyes out for trade setups, and take a look at the trail stops with potentially as a way to kind of help lock in some profits, even if you're using an arbitrary target that just sits out there of say 5 or 6 points or even a couple points. Trailing your stop along with having that arbitrary target does a nice job of locking in profits if the market does make it all the way to your target, and if it doesn't, you can lock in a little profits and limit your losses on the way. So with that, I hope you have a great week, and we'll talk to you soon.